Hello from Chicago. Alan Knuckman here on the floor of the CME Group, talking energy, focusing on crude oil. A bit of a stall today, down 20 cents, 53.20. So we're backing off a bit, but making new highs on the day. That's something to keep an eye on because new highs and lower close can be the sign of a stall. The streak has been snapped, 6 consecutive sessions upward, the longest streak in 2017. Essentially, this market started rallying at the recent lows at $47. Straight up here, today's high, 53.76. So new relative highs. It's been about a 14 or 15% move in that short period of just a couple weeks. Now, something to keep an eye on here is that we had some possibly bullish data come out. The EIA and the API numbers showed a decline in crude stocks, so that supply component didn't have much of an impact on the market. We're seeing some toppy action from a couple of factors here. We again made new highs with a lower close, but the range was only 75 cents. The low today was right about $53 per barrel. So 75 cents is a more condensed range than the typical $1.10, the average true range that the market's been in for the last couple weeks. So that's a negative. And also we saw lower volume, even though we made new highs, lower volume than we had on the Tuesday session. So these things add up to a waning of momentum in this crude market that's gone essentially straight up. Other factors, the headline today, OPEC is looking to extend its production cuts into the future, according to the Wall Street Journal report. Now, that's interesting because our man, Bob Iacchino, you see here in this space, had mentioned that they would be doing this very soon on this rally to get the greatest impact, as opposed to announcing production cuts when prices are at low points. You want to do it when the price is moving up to extend that upward movement. So looking at where we stand right now, we have a holiday on Friday, so tomorrow is the end of the week. And also something to consider here, the May contract, which is the front month right now, goes off the board on next Wednesday. So these are some factors that's going to have an impact on people's positioning over the next couple of days and how this contract finishes out. So to summarize, crude oil today, new highs, but with a lower close, so we're seeing a bit of a stall here. Technically, keep an eye on 55 up above, which is the halfway point of the old range, December to March, where it traded between 52.50 and 57.5. If we can get above 55, we could see some new highs there. Also, psychologically, we've got some support down below at $50. Alan Knuckman here at the CME Group, talking crude.